We're joined by Jim Rickards, author of the new book, The Death of Money, to talk about the coming collapse of the international monetary system. Jim Rickards, thanks for being on with us.
Thank you, Lauren.
So I want to start with a story that you begin your last book with, which is this kind of Pentagon exercise that you were involved in where there was financial warfare going on.
Correct.
First, before we get the update to that, just brief us basically on what that was.
In 2009, the Pentagon sponsored the first ever financial war game. Of course, they've been doing war games forever, but this one had special rules. You couldn't use anything that would shoot or explode, so-called kinetic weapons. You could only use stocks, bonds, derivatives, commodities, and FX to destroy your enemy. So that was the basic thing. I was on the design team. It had never been done before, so we had to say, well, what are the rules? You know, I call it playing Risk for adults. And then we played it over 2 days, and I actually got to play the game. I was on the China team, so we did that. Now, we had a scenario at the time where Russia and China would combine forces, use their gold, issue a new gold-backed currency, and turn their back on the dollar. We were actually laughed at by some of the Harvard types at the time, but since then, Russia has increased its gold reserves 70%, China several 100%. So things are actually playing out the way we told the Pentagon in 2009.
So what do you see as the next step to that? You know, just because Russia and China have been loading up on gold doesn't mean that they're close to a gold-backed currency. You know, China's currency still isn't convertible. I mean, there are a lot of issues there.
That's exactly right. They're not quite ready to go to a new reserve currency. But the death of money, I take the story forward. There are a lot of things going on. For example,
let's hear them.
Okay. Saudi Arabia feels stabbed in the back by what the president did in December. He sort of anointed Iran as the regional power, green-lighted Iran's nuclear ambitions. You know, there are all these talks, right? They've still got their reactor. They're still acquiring plutonium, which is only good for bombs.
So you mean the short-term agreement that, like, eased some of the sanctions and Iran gave some concessions as well?
Eased a lot of the sanctions. They got tens of billions of dollars freed up that they desperately needed. So it sort of took Iran off the ropes. But now Saudi Arabia feels betrayed. The petrodollar deal, going back to Nixon and Kissinger, was we would protect their national security and they would support the dollar by saying oil must be priced in dollars. Everyone needs oil. That means everyone needs dollars. Now, if Saudi Arabia changes that and says, you know, we'll take yuan or we'll take other currencies or we'll take euros, etc., then that pulls the rug out from under the dollar in part. Russia wants to get away from the dollar. They've said so. You know, the currency in Crimea right now is the ruble. And China has said the same thing. China, you're right, they're not ready to go to reserve currency yet, but they're building up gold as a hedge. So if we inflate the dollar, so take wealth from China through inflation, their gold will be more valuable. So they have a hedge position. Lauren, I'm not saying any one of these things is dispositive, but they're all important straws in the wind. They all weaken the dollar at the margin.
Why write this book now? The dollar is strengthening. Inflation is not the concern, which would cause a collapse of confidence in the dollar. If anything, deflation is the concern. So why now, and what should people actually be thinking about?
Well, you're exactly right. But the fact that deflation is a concern, and Christine Lagarde has talked about this, and
Janet Yellen,
that inflation, that's actually a bigger problem. Inflation we kind of know how to deal with. Deflation increases the debt to GDP ratio, makes debts go bad, which hurts the banking system. The government can't tax it. It destroys tax. Deflation is the central banker's worst nightmare. So what are they going to do? Ease more. I expect actually Janet Yellen to pause the taper in the middle of this year, maybe increase asset purchases later. So that's a very serious danger to the United States. And you know, the other things you mentioned, it's all part and parcel of being in a depression, having a weak economy. But if the response is ease, that's going to accelerate the loss of confidence in the dollar because people are going to look around and say, all you know how to do is print.
Yahoo!